is the DeFi Decoded podcast by 9 Point Partners. The ideas and opinions expressed in this podcast should not be taken as investment advice. Always consult with your financial advisor before investing.
Hello, and welcome back to another episode of DeFi Decoded. I'm Alex Tapscott here with Andrew Young. Andrew, Silicon Valley was once called a tech Galapagos for the unique breed of internet founder that came out of that mixture of venture capital, technology, government research, and I think culture. And it's true that the internet itself was built or developed by Tim Berners-Lee, a computer scientist at CERN in the 1980s, but really it was commercialized in the United States. And that's really been the story basically for Web 1 and Web 2, is that the US dominated. Now, there were some big Chinese companies and a few European ones as well that created tons of value and captured, big market share, companies like, Baidu and Tencent. But overall, when we think about Web 1 and Web 2, I think we think about the United States. When it comes to Web 3, I think this time is different. And this is a theme that we've gone back to repeatedly on the show, that today technology tools are more widely distributed than ever. Technology literacy is more widely distributed, as is capital, talent, and much else. But we're also seeing governments around the world kind of stepping up and trying to create the conditions for Web3 or for technology investment to occur. Now, when it comes to crypto and to Web3, the story has for many, many years been that China's banning crypto. In fact, it's come up so much that it's become a meme. Every 6 months, China bans Bitcoin again, the price goes down, and then it recovers because we realize that, it's only one part of the story. But in general, it's been true that Bitcoin hostility has been a hallmark of the government. That's true because of, mining and because of, I think, concerns that they had that people were using these tools, peer-to-peer tools, to get around capital controls or government surveillance. However, over the last few months, we've seen things thaw a little bit in China around crypto. I don't want to overstate it, and I think a lot is still left to be figured out here. But we have seen that in Hong Kong, probably in reaction to capital flight and talent flight in the wake of pretty strict COVID rules. The government has really turned around and is trying to be much more open towards Web3 innovators. Hong Kong is part of China, but still retains kind of some autonomy in some areas of decision making. So while it's true that Hong Kong can't do things without China's approval, it doesn't necessarily mean that the government of China was wholeheartedly embracing Web3, right? I think there are two ways to go about that. But then in the last few days, we've seen some more news out of Beijing that suggests that maybe this is more than just Hong Kong trying to recapture its lead or its position as a global and local financial center. Maybe this is something that the government itself in China is pursuing. To that end, the Beijing Municipal Science and Technology Commission and the Zhuang Science and Technology Park Management Committee recently unveiled this thing called the Beijing Internet 3 Innovation and Development White Paper at a forum that they held on May 27th. It was classified as an inevitable trend in the future development of the internet industry and talked basically about all the ways Beijing, as the local government there, the local bureaucracy there, can create the conditions for Web3 innovation to succeed. Now, there's an expression that the capitalism with Chinese characteristics, right? As a way to describe sort of the way a market economy grew and thrived in China. Maybe this is Web3 with Chinese characteristics, and we're not going to see some of the clear benefits that we know are true about Web3, like self-custody or anonymity or zero knowledge proofs and so forth. But still, it seems like kind of a big change of pace for a government that we have always thought of as kind of a hostile to this technology. What do you make of this news and in general, just sort of the lay of the land as global regulators are shifting in their perception of this industry?
Yeah, I thought it was actually it was pretty surprising. I feel like we've become quite used to, China has banned crypto once again.
Yeah, right.
It's been it's almost become a meme within crypto that China is constantly re-banning crypto. And they'd actually mostly sort of snuffed out Bitcoin mining, as well as like certain, most of the centralized exchanges. in this space. But DeFi, there's been some DeFi projects in China that have actually persisted. And so for the most part, a lot of DeFi projects in China, once they got to a certain level of sort of funding or success, they would move to Singapore. So that's why Singapore has historically had a huge sort of an outsized DeFi and crypto ecosystem, just because it almost becomes like it collects all of the sort of entrepreneurs from China.
Yeah.
So it's really interesting. I mean, I don't really know what to make of it because at the same time that we're hearing sort of rumblings at the top that China is trying to embrace more Web3, as I think they also said they're trying to spur the growth of AI, brain-computer interfaces, and semiconductors. At the same time that they're doing that, I saw some news over the last week that multi-chain, which is one of the largest, I think if not the largest, cross-chain bridging projects in DeFi. Yeah. So they essentially allow users to bridge crypto assets from one EVM chain to another, typically from Polygon, Ethereum, Avalanche, all these different chains. They had been raided by local Chinese police, or at least that's the rumor right now. And they put out an announcement on Twitter saying that due to, quote, force majeure, they were shutting down certain bridges that the sort of founder and CEO had sole access to. And so sort of reading between the lines was that essentially he had been taken in by questioning by local Chinese police. Again, that's sort of at the local level. I've also heard from some sort of prominent crypto Asian VCs saying that the local crypto founders in China are effectively targets for local police for essentially just shakedowns. So it's kind of just open season on founders there, and just kind of further reaffirming to people that they should leave for Singapore if you're a Chinese crypto founder, because you essentially have no protection. So I mean, it's interesting though, because it's kind of like if you get enough rumbling from the top that crypto is back to being sort of kosher, if not in mainland China, then at least in Hong Kong, then that it doesn't take much for that to spur the growth of the Chinese crypto ecosystem. Given the fact that China is like the perfect use case for crypto, just given the sort of vast amount of capital controls. So it's most of, at least people who some people I've started to follow say that most of Tether's growth has just been getting money out of China in certain respects. And so clearly there's a lot of demand for crypto in China. That's why they've banned it so many times. So if we got even just a little bit of opening up there, that's just a massive catalyst. But I'm seeing, I'll believe it when I see it. You know what I mean? I'm still quite bearish on this being a real thing as of yet, but it would obviously be a huge catalyst.
Yeah, I mean, I think you're absolutely correct. I think that there's a part of me that wants to believe that China sees the change of tone in the US as an opportunity to attract talent and capital and to create, new champions in China. But I'm very skeptical, because I think that so many of the properties of crypto assets and of Web3 in general involve the idea of ownership and privacy and sort of self-custody and the ability to transact peer-to-peer in a sort of free and open marketplace. And I think all of those things kind of grate against the government model that exists in China. Maybe though China, I mean, in the past, China's surprised us. It's a vast country. It's a huge economy. It's got a big government with a lot of different forces at play. It was a closed off, Maoist state, and then it became the biggest exporter of manufactured goods in the world, and a country that has minted billionaires and lots of global champions. So who knows? I mean, things can turn around. I'm not some China expert by any stretch, but I've been there many times, and I know that what you read in the headlines and what you see on Twitter isn't always what's going on the ground floor. And it sounds like you've got some intel as well. I do think, though, that I mean, if most people in China are using crypto today to get money out of China, and that's something the government is opposed to, then I can't see the government embracing that side of it. So, like I said, it could be have your cake and eat it too. You know, Web3 with Chinese characteristics. Who knows how that kind of plays out? But in general, I would treat it as a welcome sort of update to the global discourse about this, because it sucks if the two of the three biggest economies, common markets in the world, are hostile. Speaking of big common markets, and let's go to the third one, the oft forgotten common market of Europe. Circle, the biggest US issuer of stablecoins, USDC, has announced that its multi-currency strategy is moving forward. Its coin EUROC has been sort of introduced here. So this is very interesting. They already launched on Ethereum back in June of 2022, and now they're starting the rollout on different chains. Next up is Avalanche. Important to note that USDC is issued, I think, on like a dozen different chains, if not more. Most of the volume still happens on the Ethereum mainnet and sort of related rollups, but part of their strategy has always been to connect into different chains, connect into different kinds of projects so that they become a payment rail and on-ramp, off-ramp for a lot of activity in DeFi and Web3. I find the decision to, launch a Euro coin quite interesting and quite timely, because Euro coins are actually, for the first time, a good business model. I think a lot of people looked at the growth of US dollar stablecoins and concluded that, well, the US dollar is the global reserve currency. It's the thing that most people want as an on-ramp, off-ramp. And so as a result, this is the thing that, is going to grow the fastest. And there's probably lots of truth to that, to be sure. But there's another funny little thing, a quirk of the business model of stablecoins that made a Euro coin really difficult to launch. And that's basically that as a stablecoin issuer, you take in deposits, money, and then you use that money to buy short-dated government bonds, basically risk-free assets. And as a stablecoin issuer, when a person gets a stablecoin, they're not earning any interest. It's not like a deposit account at a bank or something where you earn some nominal rate of interest. People are using stablecoins as a way to store and move and spend dollars, and they're not expecting any kind of interest. So that makes, in this kind of environment where the U.S. short-term government bonds are trading at 3, 4, 5, not 5, but 3 or 4% yields. Basically they're earning kind of 3 to 4% in risk-free returns. However, until about a year ago, almost all the sovereign debt in Europe was negative interest rate. So basically, like people, savers, institutions were paying money to governments for the privilege of borrowing their money, right? Which is like insane and was unsustainable. And that's no longer really the case. But at one point, there was $16 trillion of negative yielding debt. And that's just on a nominal basis, not even on a real basis when you factor in inflation, right? So basically like negative interest rate on all the bonds. Now that a bunch of Euro bonds are trading at positive interest rate because arguably the ECB's had an even more aggressive hiking cycle than the Fed and doesn't seem to be letting up. All of a sudden, there's a bunch of bonds you can buy that are sort of more or less risk-free or low risk that you can use as a way to park deposits while you issue stablecoin, right? So I'm interested to see how this plays out, whether or not the EUROC ends up seeing tons of flows the way that USDC and USDT and BUSD before it kind of shut itself down. Whether we see those kinds of flows because of this change, or whether or not the US dollar kind of has the network effect, and now US dollar stablecoins have the same network effect, and it's going to be difficult to dislodge. I don't know how it's going to play out, but I think that the conditions are right for this to succeed if there's demand.
Yeah, it's interesting because I feel like it's been something that people have consistently thought of as like a very obvious, business case.
Yeah.
And for some reason it hasn't taken off. It sort of reminds me of like tokenized securities, where everyone's like, well, the US dollar stablecoin is so big, clearly there should be like a Canadian dollar stablecoin, a euro stablecoin, all these other stablecoins, and they've actually existed. They have existed like up until now. Like this is not the first ever euro stablecoin.
Right.
It is like the first euro stablecoin by a big company like Circle, though. Like for example, we had the DFX Finance founders on this podcast almost exactly a year ago, maybe a little bit over a year ago.
Yeah.
And they essentially provide an AMM for trading between different it's essentially an AMM for Forex. So you can trade between, Turkish lira, euro, US dollar, USDC, all these different things. And what was interesting is that they've been doing like great team. They've been doing pretty well, but it's a pretty tough market because it's really just the USDC, like US dollar is the only thing that really people use. And I don't know. I don't know. It's kind of interesting. Like I think there's a good chance that the USD, like US dollar, really just reigns supreme. Because like in a lot of ways, it's actually perfect right now in the sense that everyone uses just one currency, like one stable coin. So it's really easy, you know what I mean, for everyone to just kind of like transact using the US dollar. We're Canadian based, we use US dollar. Some of our vendors, they could be in wherever, like Estonia or something, but they still use US dollar, right? So it's much easier for project founders, at least, to just manage the Forex risk of one specific currency versus if we do kind of replicate the traditional fiat world in crypto, where we have tons and tons of local currencies. That's actually kind of a bad thing in a lot of ways. I understand it's probably necessary for mainstream adoption, particularly as we go into like more local use cases. But in a lot of ways, I kind of like the current setup because it aggregates liquidity in just one currency. So I would say I'm mildly bullish on, or mildly bearish on it long term. Just based on sort of how it's gone up until now, but sort of recognizing that logically it makes sense that other sort of fiat currencies should come up. But like, I don't think there's anyone that is there really like a ton of inbuilt demand for like the Turkish lira or even like the Australian dollar or Canadian dollar? I'm not sure. Euro is probably the only other currency that there's a lot of sort of demand, particularly just almost as like a diversification for US dollar. But I'm not sure. I'm still relatively bearish on local fiat currencies becoming big stable coins. I don't know.
As well, when it relates to smaller currency issuers, I mean, there's still many countries that are currency issuers, like Canada and Australia, that are G8 countries, as big economies. But outside of Canada or Australia, those currencies aren't really widely used, right? Like you even mentioned, as a Canadian business, and I've owned Canadian businesses. I own Canadian businesses. Everything is in dollars already, US dollars. And that's, maybe that's a system that's ripe for change or not. But I don't see a bunch of smaller currency issuers creating stable coins. Like in Canada, we've got this interbank, settlement system called EUROC. It's been around for like 30 years, where you can settle transactions between financial institutions and values up to 10K for free instantly. And, for 99% of kind of retail and small business transactions, that's more than enough. At a commercial level, there's a bit more friction. So, maybe there's an opportunity for a Canadian dollar stablecoin in Canada for interbank settlement for businesses and for other large organizations. I can certainly see something like that. But outside of Canada, I don't see it being widely used. I do think the euro's an exception. And I'm also curious about other currencies that are sort of specialty currencies. Like I can see a ruble or a yuan or something being a settlement rail for like oil and gas transactions between countries in the global south and those who are, kind of client states of China, for example, requiring the use of something like that. But in general, I'm with you that if the experience in DeFi and in crypto has taught us anything, it's that one of the great ironies is that the US dollar is the sort of killer app or the first killer app of blockchains, and the network effects have made it very, very convenient to use. I mean, once you get in, it's easy to move stuff around, to put it to work, to store it and what have you. So yeah, I'm skeptical as well, but I think long term, there are going to be a couple of fiat currency winners that get widely digitized and widely distributed, and I think the euro is probably going to be one of those. But I don't see this like all of a sudden threatening the US dollar hegemony in the stablecoin world, right?
Yeah, I totally agree. I think long way to go. Crypto up until now has been like the most dollarized world. I always say it's kind of funny because crypto, Bitcoin was set up to sort of disrupt the US dollar in a lot of ways, at least within the Ethereum ecosystem. It's been probably doing the most to promote adoption of the US dollar across different countries digitally. So
yeah, absolutely. Do you have any view on ordinals, AY?
Yeah, I think we chatted about ordinals, I think, a couple of weeks ago.
I know, but it seems like ordinals have gone from this thing that like people, that Bitcoiners were pissed off about, to one where, I mean, not everyone, but it seems like they're becoming like more than just a meme, more than like trolling Bitcoin and actually like a real thing. I don't know. I always got the impression earlier that this was like, let's clog up the Bitcoin network with a bunch of NFTs. And now it's like, maybe there's something to it. Maybe the Bitcoin network actually can be programmed to do more than just like, work for Bitcoin. I don't know. I just feel like there's a vibe shift a little bit.
Yeah.
That closely. And I'm just wondering if you have a view.
Yeah. So, what's interesting, actually, I have, we could save this for another episode because I have a friend who is like an OG in the Bitcoin ordinal space. I was actually talking to him literally today about getting him on the podcast. So,
oh yeah,
let's make that happen, and we can explore the niche but rapidly growing world of Bitcoin ordinals from I think one of the largest holders of it. So,
oh really? He's
I think he owns
ordinal whale.
Ordinal OG whale for sure.
That's a bit of a mouthful. The ordinal or OG whale. Yeah. All right, cool. Well, bring the whale on board, load him up. Yeah, well, I think that was a pretty good chat. I mean, there's a couple other things that we wanted to touch on, but maybe we will save them for another episode, because that was a kind of a good like little geopolitics, little market chatter. Should we finish with a quick like macro roundup? I mean, we've seen the debt ceiling talk.
Yeah,
led to some kind of a deal. It's still got to clear Congress, but it appears as if it's going to have the votes, and so that'll push the debt ceiling discussion off until I think January of 2025, so the next presidential cycle. Stocks ripped on the back and have given up all their gains, pretty much fading. Crypto similarly caught a bid and is still kind of holding those gains, so acting a bit like a risk asset, but not selling off quite as much. I don't know. I mean, it's a funny thing, like, with the NASDAQ was on a tear following the NVIDIA announcement that AI is going to solve all the world's problems, and we're all going to just need so much more computing. And so we saw that, but then the crypto, ETH and Bitcoin didn't really participate in that. And now we're seeing them sort of like hanging in a bit. I don't know. What's your view on what's going
on? Sorry, I missed that last part.
Oh, just that like the NASDAQ, the stock market has been doing pretty well the past few weeks.
Oh, right.
NASDAQ has hit, a 14-month high. Still well off its all-time highs, but this is on the back of NVIDIA and the AI craze. And then crypto wasn't really playing that big of a role in the rally, but now it seems to be participating a bit. I'm just wondering, what's your view?
Yeah, no. I mean, it's the big question. I don't know. I'm still like mixed to slightly bearish on crypto over the next 6 months. I mean, we've talked a lot about it on this pod, so I don't need to sort of belabor the point. I think inflation is going to continue to come down to around maybe 3 or 4%, but I don't think that's enough to get the Fed to start cutting. I think from a macro side, we're still sort of 6 to 12 months away from positive tailwinds for the crypto space overall. I think there's still some excess in the space that needs to be worked out of. Though I will say, during the last bear market, there was still, like at the bottom of the crypto bear market, I thought there was still a lot more space to go downwards, just given like how some projects that I thought didn't deserve their valuations still had sort of premium valuations. So like just based off that and the previous market before that, like these bear markets, at least from what I've seen, have never fully fleshed out sort of the garbage. I think we're now at a point where most projects that don't have any fundamentals have been sort of flushed to zero. But there's still, there's still some meme coins and stuff that have been doing well. So I don't really know. But I would say we're still 6 to 12 months away from sort of positive macro tailwinds. We obviously have the, like I talked about earlier, the halving coming up pretty much exactly 12 months from now. I think it's maybe like 11 months now. So I'm still kind of mixed over the next 6 to 12 months. And I still think most people in the industry are sort of batten down the hatches mode, besides, the occasional meme coin rally or Bitcoin NFT rally.
Well, I get the sense from like crypto Twitter that there's a lot less talk about, announcements and, fundraisings and stuff like that. But I also get the impression that there's lots going on behind the surface and behind the scenes, right? And that's a theme that we see a lot during bear markets is like, builders build during bear markets, tourists leave. And so I am like quite excited about, every week, like in our weekly note, Jake, my associate, and I put together, summary of the news, and I write an essay, and like there's just a deluge of really interesting stuff that's going on. It may not be as promoted as it was during the bull market when positive move in your TVL or partnership with some company can lead to a gazillion-dollar re-rating in your valuation. But we are seeing a lot of really interesting building going on. But it doesn't seem, so far to me, I don't see like one clear thing that's going to act as a catalyst to like jumpstart the next bull market. I know it's out there, but it hasn't revealed itself to me. Like last time around, 2019, 20, when things were quite quiet, that was the start of really stable coins like Tether's quick growth and DeFi, which kind of happened in tandem, and the two supported each other. And then we saw, a million other cool things come out of that. This time, I'm not sure what that thing is. Do you have any view? Like, I know, other than SX, which maybe that's it. Like maybe it's, let's apply DeFi, print, like the concept of AMMs and smart contracts and, these efficient peer-to-peer markets, and let's just apply them to other kinds of marketplaces where there's real value being traded and real economic activity. And maybe that's the solution. I'm just wondering what your view is on that.
Yeah, I think the next wave, we talked about this, I think a year ago, or maybe at the year-end episode. I think it's going to be fundamentally sound projects. So, the first wave of crypto, people didn't even have products. And then the most recent wave, we've graduated to projects that actually have products and have revenue, but we're deeply negative on an earnings front. One of the interesting things that's happened over the last 6 months since we did our year-end episode, where we sort of called for the next wave to be projects with earnings, not just, revenues,
right.
Is a ton of projects have completely cut their token incentives. And that's hurt growth quite a bit and TVL.
Yeah.
But the end result is actually a sustainable protocol. You know what I mean? Like if you cut token incentives by 100%, sure, your revenue might go down 80%, but you go from being deeply negative earnings to being even slightly positive earnings. Mm-hmm. And so that's actually been pretty interesting to see. We've seen projects cut team size as well. For example, like Dune Analytics, which isn't a DeFi project, but it's an analytics portal built on top of DeFi. They just announced today that they were letting go 30% of their team, and they're like a very well-funded team. Yeah, so there's pretty much just been layoffs there's been layoffs around across the board on core teams. There's been like almost complete elimination of token incentives across the board. And so the end result is a space that is quite a bit smaller, but is on much more sustainable, economically sound footing. And I think that sets the stage for what we think the next wave will be, which, both me and you talked about, is going to be projects that are actually quite undervalued from, a traditional DCF perspective, with lean team sizes. And I think, again, we've talked about this a lot. They're not going to be dealing with unscalable infrastructure. They're either going to be on highly scalable L2s or L1s like Solana, and I think the more advanced ones will build out their own infrastructure with app chains. That's why, again, I think Cosmos and Polkadot are probably going to be sort of like the Solanas or Avalanche of the next cycle. That's why I'm obviously super bullish on both. So Cosmos, I think that's Polkadot. Yeah, mostly Cosmos. I think Cosmos has sort of separated itself, but I'm quite bullish on what they're building.
Well, I share a similar view, as you know, on all those things. I think that's interesting, the idea of like sustainable growth. I mean, it's funny because, I realize we've been talking now for 40 minutes because I have views on this, which is like, outside of Web3 and outside of crypto, plenty of companies have used investor capital to subsidize their growth for an indefinite period of time. And of those companies, several of them made it and many of them did not. And that's like the entire 2010s was companies like that, right? Like in a zero interest rate environment, you can afford to deploy capital that kind of costs nothing, right? And you can use that as a way to subsidize customer acquisition by artificially reducing the price of your goods and services, which is why Ubers were so cheap. And eventually that catches up with you. And so I think maybe you can almost think of like the first cycle of DeFi of projects with unsustainable yields where, there wasn't enough earnings to buy back tokens and keep the float in check. That's almost a kind of a corollary to what was happening in traditional VC in a way. And now we're in this environment where money is tighter, where you can earn 4% risk-free buying government bonds, where, companies in the market, public markets, are being told to show that they're cutting costs and driving, earnings to the bottom line. And maybe that same ethos is also playing out here, right? Like we sometimes think of crypto as existing in a vacuum that, has its own kind of peculiar rules and culture. And that's true to a degree, but sometimes it's a reflection of what's going on in the real world. I don't know if you've thought about that at all.
Yeah, I think, it's interesting. I've been kind of going back and forth on this because I don't know where crypto is going to be without the zero interest rate environment. You know what I mean? Like, I think it almost by its very nature, we have to have sustainable, economically sound growth, just because up until, the next cycle, we've been able to deal with just historically low cost of capital. And so the only real way out of this sort of bear market for both general tech, like you said, and crypto tech is really going to have to be, economically sound growth. But that also makes me think that there's potentially there's less upside in crypto as well as sort of Web2 tech, but I think there's also a lot less downside in this sort of environment. So I think the crypto and just tech as well has just been beaten down so much that the risk reward right now is quite favorable for pretty much everything but maybe Nvidia stock. So I think, I'm quite bullish, though I do think the headwinds over the next 6 months will be pretty significant. I think we come out of this on the other side looking, more investable than we've ever been.
Yeah. I couldn't agree with you more. Well, we'll see We'll see. Okay. Well, that's it for this week's episode of DeFi Decoded. We're going to have the Ordinals whale on at some point in the next little while. Don't know if that's next week or the week after. I'd also like to do like an update on, a vibe check on NFTs and Web3 gaming and, the open metaverse. I feel like that was a topic that was super hot. And I know there's a lot going on, but it's definitely receded from the headlines. I just think that like ChatGPT and OpenAI and generative AI generally have really like sucked the oxygen out of the room. But I think we're due for an update on these kind of cool concepts. And then maybe we should have someone on to talk about the intersection of AI and Web3 and blockchain, because there's actually quite a lot there. And there's some really interesting projects like Ocean Protocol that are, sort of seeing the convergence of those technologies. So lots of really cool things for us to dig into in the next little while. I hope to our audience that you'll continue to tune in, because there's tons of interesting things going on, and we hope to be the ones to explain all that it is and why it's important. So thanks again, and we will see everyone next week. Take care.
The information contained herein does not constitute an offer or solicitation by anyone in the United States or in any other jurisdiction in which such an offer or solicitation is not authorized, or to any person to whom it is unlawful to make such an offer or solicitation. Prospective investors who are not residents in Canada should contact their financial advisor to determine whether securities of the funds may be lawfully sold in their jurisdiction.